G'day, I'm Shannon McCormack and I'm here with the Young Farmer Business Program. We've put together a short clip to explain what a balance sheet is. A balance sheet is a snapshot in time, so the now of a business. Previously I spoke about the profit and loss, and that's the past, where this is the present. A balance sheet reports on a business's assets, liabilities and owner's contribution of capital at a particular point in time. The assets shown on the balance sheet are those items that are owned by the business, which have value and for which money was paid. A balance sheet is basically the breakdown of the business's assets and liabilities. Assets are what the business owns and uses to conduct business, where liabilities is what the business owes to someone else. So on the balance sheet we have assets. Assets are broken into two areas, current assets and non-current assets. Current assets are things that can be turned into cash quickly, or as they call liquefied, quickly. So these could be in inventory, things like grain on hand, wool on hand. Then we've got accounts receivable and cash at bank. They would be what we'd call current assets. Non-current assets, they're things like land, buildings, things that are a bit more fixed, things that aren't liquefied easily. You can't just sell a block of land overnight, sort of thing. Now we move on to liabilities. So same again, liabilities are split into two areas, current liabilities and non-current liabilities. So current liabilities are pretty well things that are due within 12 months. So if we have an account at a rural merch store, say you've bought fertiliser, it's going to be due within 12 months. Things like if a bank loan is due and the term's up within 12 months, that will be a current liability. Then we move on to non-current liabilities. So they're things that are a bit further out. So you may have a 20-year bank loan. It's non-current. Equipment finance over 7 years. It's non-current. Now we've looked at assets and we've looked at liabilities. This is where we come and look at equity. Equity is usually represented as a percentage. Owner's equity refers to the owner's part of the business assets. How we'd calculate this is taking total assets minus total liabilities, and this is where we get our equity. Hopefully this gave you a good understanding of a balance sheet and what assets and liabilities are.